Guys, good afternoon. This is Cedar with Market Mastermind. We are doing a Mind Over Matter, the psychology of trading session for about the next 15, 20, maybe 30 minutes. So, not trading right now. Market's pretty mellow. Caught some nice moves this morning. I wanted to go over risk management and position sizing, which has been incredibly relevant. I think the last time I talked about this was probably back in May, right when we first opened the server. So if you guys have any questions, tag me in Market Talk. I'll be watching that as well. But jumping right into it, I want to talk about how I position my $25,000 personal account that I trade, that I alert for, because I think that that gets a little confusing. Some people think it's 25K, like with Apex, which would only have a $1,500 trailing drawdown. And you cannot trade what I trade with $1,500. You'll be probably the first day, like you'll just get trailed out. So what you want to look at when you're trading a prop account is that you're trading the trailing drawdown, especially if it's a trailing drawdown instead of a EOD, end of day drawdown. So it's $25,000 that my rule is typically 3 ES contracts per 10,000. But because I don't change the sizing through the whole month, I just start with 3 and I end with 3. And there's some reasons behind that. One, if margin is increased, I'm nowhere near getting margined out, where we've seen with the volatility like we had yesterday. Tradevate moved from $500 per ES margin contract to between 1,500 and 2,000, depending on where you were in the day. And you don't notice that if you're properly sized. You do notice it if you're trading like with $1,500 and 3 ES contracts, then you got margined out. So when we look at proper position sizing, it has to do with a variety of things. One, your risk tolerance. So what you don't want to do is take your entire money that you have as risk capital and go and full port it. We talk about that all the time because you want to think about not how much you will make, but how much you can lose. So if you're focused on, okay, well, let's use a hypothetical $2,500 account. So you have $2,500 and you're trading 3 MES, because that would be the equivalent, right? If you sized it down, so a smaller account than what I'm trading, and you all of a sudden see, wow, the position's going against me. And now you start adding ES contracts because it's going to allow you to add what's $55 margin per MES that you add. And you start adding because you're like, no, I think this is going to come back. I'm going to keep adding. Now you're sitting in a position where if the margins change and which the broker makes the decision based on the risk management of how you've traded the account, of what their risk level is, and the potential for that account to go in the negative, and then them to have to try to collect it from you, which is what they do. So there's the danger in futures that we always talk about. You can lose more than what you put in because the account can go negative, versus options where if you put $500 in an option trade and it goes to zero, it goes to zero. So if we're properly sizing, then the stress levels of what you're experiencing are hugely different. Because if I say take that $2,500 account and did oversize and went, okay, I just turned this into $5,000 in 2 days, one day, because let's say you traded 3 or 4 ES contracts on that, which it would allow you to with the $500 margin. So then you get what I call the superstar complex, or the rock star, where you're like, wow, look at that. I just doubled my account. Look how good I feel. And then you do it again because you think, well, I did it once. Imagine what I can do. And maybe you get lucky again. Maybe now you take that 5,000 to, let's say, 7 or 8,000. At some point, that's going to turn against you. And usually it's not very long. Usually it's you get 1 or 2 days of that kind of thing, and then it's over. And then all of a sudden your $2,500 account that you took up with huge exponential increases is now $32 because you kept oversizing. So the way I manage my $25,000 account is I start with 3 ES on day 1, on day 10, on day 20, on day 30. It doesn't matter how much I have made on that account through the month. I do not increase my sizing. And so we can't even really call that sizing, not sizing up, because if I withdrew the profits every day off of the account, which would not be a bad idea, I'm just going to throw that out there. If I withdrew those profits every day, that would be considered equal sizing. Basically, I'm leaving the profits in there so that they're visible to be able to be seen growing. But if I am trading, like I finished last month, just over $60,000 from a starting balance of $25,000, if I continue to increase what I was trading to be equivalent with what I started with based on the 3 contracts and that 25,000, the drawdown days later in the month would also be larger. And I run the risk of giving back more of the profits that I made earlier in the month that built that up. And so I've just found that that's the best balance mechanism for me as far as long term. How do I keep my mindset focused on this is an income producing account? This is how I make money. It's not for ego. It's not for anything else other than I'm going to take this and think of it like a business. If I think of it like a business, if there's something not working, I stop it, which is if I take 3 losses in a row, I stop trading for the day. And if I'm trading well, I keep trading for the day until I take a loss and then I might step back. Or like in the instance of today, I had 3 large trades and there's no setup. There's nothing for me to really trade. So then I'm going to sit back and wait, and I might take one more trade today and I might not. It just depends on the setups, but I'm not going to stop trading because I'm largely profitable on the day. I will stop trading if I am losing on the day and those 3 losses in a row. So it limits the downside and doesn't limit the upside, which is really, really important. And that's one of the reasons why I don't have like profit target goals, because if I'm trading well, why would I stop? I'll trade until I'm not trading well. And then when I take a loss, then I'll stop. So I had a question in Market Talk from Chief Carl. It says, can you talk about scaling with a standard 50K prop account? How would you grow as the account size grows? So when you're starting with a 50K, it kind of depends on the company, but we'll use Apex hypothetically because it has the trailing, which is probably the trickiest as far as you have to be popping out of those. You can't give them as much room when you see the bigger pops. So you've got $2,500 in trailing. So you're thinking of that hypothetical I was just giving. It's $2,500 that you're trading with. So if you're in a combine, you're trading 2 to 3 MES on a 50K account because it's proper position sizing in relation to what that trailing drawdown is. Now, as you increase, so let's say you make it through your eval and you get your PA, you continue to trade it. You want to trade it in the evaluation exactly the same way as you trade it once it's in PA, and then hopefully eventually to live. Because what happens is we get in this habit of, I'm in a full port, I'm going to use all the contracts that I can, and bam, you've got more accounts blown up. And then it's harder to transition once you do pass an account, which they call a windfall trader. If you look at their contracts, you pass into the PA, and then your brain is still stuck on how that many contracts moves. So I think the 50K is 10 contracts. And 10 contracts of ES moves really different than 3 MES, right? There's not adrenaline and endorphins involved in 3 MES in the same way. So my preference would be that you take longer. You're not trying to do that one day to pass kind of concept, because it's what's going to earn you. Oh, speaking of, Barkin is speaking right now. He was not listed. I don't know. I think Bowman was listed today at this time. Anyway, take note if you're in trades, Barkin is speaking. He says recent labor action and geopolitical conflict are also among the inflation risks. Okay, back to it. So once you get your PA over the 2,500, then we can start talking about scaling, where each $1,000 gets an additional MES contract. And that doesn't matter if it's on a PA or a live, like your real own personal money. So if you deposit $3,000, you get 3 MES contracts. If you deposit 5,000, you get 5 MES contracts. If you deposit 10,000, you can either have 10 MES or 1 ES contract. And 1 is kind of hard to trade. I have to be honest. It's the way I trade, I could, but it's not typical. Most people need the ability to be able to add. So I would rather see you do 10 MES and add 3 at a time in batches so you can scale into it, because a lot of times that first entry is rough and it gives you the opportunity to build the position instead of add to it and oversize. Oh, so Barkin's speaking early. Okay, awesome. What I like about the ability to be able to regulate your risk management, like inside Tradovate, if you're using a personal account, you can actually go into the risk settings in the back end of the software and change your risk parameters. So you can't do that in a prop account, so you have to use your own self-control. And I'm telling you, self-control is a limited resource. If you're having to use it on other things, maybe even not other things, just trading, impulse control, things like that, it can be very hard to talk yourself into it. So that's going to be a muscle that you have to develop, the same as if, you know, you want to squat more weight or bench press more weight or whatever. With exercise, the self-control to be able to not oversize in those positions is huge, because the prop firms won't allow you to limit those contracts. Now, if you're using Top Step, you can actually contact the risk team once you're in an XFA and just say, hey, I want to stay limited to a certain amount. Once you're in a live account, you can, they are very flexible as far as you can limit the number of contracts you can trade, you can limit all kinds of stuff, and you can also expand what those are. So if you're trading a smaller account, you can, they will increase it and so on and so forth. So what's important to know is that I've really primarily transitioned. I'm not trading a lot of prop these days because of the tax consequences I had from the previous year. So the goal that you want to keep in mind is, if that's going to be your trading capital and you're okay with paying a little more taxes because that's your trading capital and that's all you have, that's great. You're going to have to manage your own risk. You're going to have to flex that muscle, that self-control muscle, a little bit more, and just say, until I get to $4,000 in trailing, I'm not taking it up to at 4 MES. And maybe you can expand that a little bit and say, well, I'm doing 3 with 2,500, so I'm going to do 4 at 3,000. You can open that up a little bit. What I don't want to see is $2,500 in trailing and you're trading 3 ES contracts, because you're not going to keep those accounts. It's just not going to happen. One wick like we saw yesterday. I mean, I'm sitting here looking at the 30-minute chart from the last 2 days. One wick like that with some slippage, and you're in trouble if you've got 3 ES contracts on. And all of a sudden you're now staring down the barrel of $500 worth of trailing left on your account. And now you get one MES contract. And that's almost oversized, but that's all you get. So I think it's really important that you're thinking about the trailing the same as you're thinking about real money. And that's actually going to help you, because the goal is to get you out of primarily trading prop firms into funding your own accounts to be able to trade, so that the tax consequences are less, so that you can set your own risk parameters. And as you size up, one of the things that I've found incredibly helpful is to not say, okay, I started with 2,500, now I'm at 5,000. I wait and I give myself the opportunity to hold that 5,000, to hold that increase for at least a week. And when they're bigger increases, let's say you took it from 2,500 to 10 grand. So you've got your trailing drawdown or your real account at 10 grand. I want to see my ability to hold it for at least a week and maybe 2 before I'm going to scale up and say, all right, now I can trade 1 full size ES. Because I want to see that my brain hasn't tricked me into thinking, You are amazing. Look how good you are at trading. Because that's what we hear, right? That's if you could just keep doing this. We hear that if you could just keep doing this, you could have 100 grand at the end of the month. And your brain is tricking you. It is definitely tricking you because that's when you're going to blow your account. So if you focus on how much you can lose, which is what the prop firms are supposed to be teaching you, if you focus on how much you can lose instead of how much you can gain, you're going to be just fine trading. Managing the downside risk is huge. So setting up those rules, you can borrow mine and adjust them or make your own, but you've got to have rules and you have to follow through on consequences if you don't follow the rules. So if I'm kind of in that gray area of, well, I really shouldn't have been trading there, but I went ahead and took it, and now I took 3 losses in a row. My rule is that obviously I'm not seeing something right, and maybe I wasn't in a gray area. Maybe the market was just, it was just not in my favor that day. It is what it is. Happens sometimes, and it happens to every single trader. Anyone that says that it doesn't is lying, no question. Or they're a brand new trader and they've got a month sample size or 3 months or something. I don't know. Anyway, the idea is you need to have a consequence for yourself if you break the rules. So if you're breaking your rules, and I'm talking like my rule is I don't trade in the first 5 minutes, one of them, or I am having a rough day, something going on with my mom who's elderly, distracted, things like that, and I'm not able to be at my desk and I'm trading from my cell phone, which I really don't do. I sometimes will manage a trade if I need to get out of it. Like if I run inside or run a quick errand, I'll keep the ability to be able to manage a trade, but I typically won't enter a trade. I'm not doing TA on my cell phone if like I'll say, hey, I'm going to trade futures tonight. Go have dinner on the porch. I'll have my laptop, my iPad. So I've got my 30-minute execution chart. I have my things that I need to be able to see, my tools to be able to see the market. If I were to take a trade on my cell phone with all of that, that would be considered breaking a rule in my book, even though it's not a written rule. You don't have your full faculties about you if you don't have at least the ability to look at more than just a trade screen. That period. There's just not. I'm sure some people do it fine. For me, it's just not something I will do. Then I would not trade the next day because I was being reckless. Now, I don't think I've done that in a really long time, but I have in the past repeatedly, which is why it comes to mind. Like, oh, I've got my 5-minute chart up right here, and I'm in the E-Trade. I can see what it looks like. It's totally good. And it almost never works in my favor. Almost never, which is why I created that rule. And then I have additional rules beyond that. So if I break a rule and say that I'm not trading the next day, and then I come back to trading the following day, which you guys see me, I trade every day, right? I would rather follow my rules and continue to be able to trade than I would break them. And I had to instill that self-control for myself, because if I didn't, would not be trading at all, because I would have run myself into the ground too many times and I would not have been able to recover. So how I think about it is my punishment for breaking my rules is that I don't get to trade. And if I do it again, I don't get to trade for a week. And if I do it again, it's a month. And of course, I have to be the mean guy there, right? I have to be the one that enforces it. But I couldn't do that at the beginning. So I actually handed passwords over to my husband and said, I'm just going to be accountable to you because I clearly keep breaking my rules and I know what they are and I just keep doing it. So at the end of each day, we're going to recap. We're going to talk about the trades. You don't have to understand the technicals behind them, but if there's a rule broken, you're going to change the passcode on me for tomorrow and I can't log in. And as much as I don't want to do that, I need to know that there is a hard stop on my behavior. And you got to think about that. Like, don't move your hard stops. Hard stop on your behavior of oversizing or of breaking rules or whatever that is. And oversizing is definitely not using good risk management is breaking a rule. And so eventually I got where it took away that impulse of like, gotta trade, the market's open, gotta trade kind of thing that used to happen to me a lot. And why you also see me say a lot of times, hey, I'm not trading until the initial balance is formed, because I learned that impulse control. I learned that sit back and watch, sitting back in the chair, taking some deep breaths, maybe do some stretching. My trading room is a combination of the gym and my trading screens. And I think I have those posted in the Psychology Risk Management channel, but now I have to think about if they are there. Pretty sure. Anyway, I'll get those posted for you guys if they're not. But knowing that it's okay to not be in a trade, sit out power. You see me say hashtag sitting on hands is a superpower. Hand sitting is a superpower. You have to learn that delayed gratification, that I don't have to have that impulse into a trade at all times. So it's 1 MES per 800 is probably okay. I mean, it's going to require $55 in margin. So even if it margins up huge, you're not going to get completely wiped out. My typical rule of thumb is $1,000 per MES and 10,000 per ES contract. But like I start my 25,000 with 3 ES because I'm not going to increase it. So I started what would be technically a little oversized. So you could use that rule and say about $800 or about $8,000 per ES contract. And there's a lot of people that'll say that there's no reason you should have that much money in your account. It's what's worked for me. It's what I've found has been the best balance. And it's exactly what I do in my main trading account, my larger account, but on a smaller version. So it lets you see without, watching 10 or 15 contracts being traded, which then people get the FOMO and the craziness. So that's why I started doing that 25K account about 2 years ago, to let people see what that looks like in a reasonable flow with what would be considered a smaller account in the trading world. Although it doesn't matter the size. If you can't trade $800, you can't trade 8,000, and you definitely can't trade 50,000. So the reason I would wait that little bit of time as you grow it. So let's say you're trading an $800 account with 1 MES contract. I would get it to $2,000 and hold it for a week before I added a second one. And then after adding the second one, if I took it back underneath $1,600, and that would be on the daily close, or you could just say, once it dips under 16, I'm going back to 1 contract. Because that says when you sized up, something was wrong, something was different in how you were reading things, and you need to reassess. So it would be better to keep doing what you're doing, consistently making that money and keep adding to it. Because if you can go from 800 to $2,000, that's a 150%, right? That's a good times kind of situation. Why not just keep trading one? Why not keep doing what you're successful with? And I write about this in my monthly recap. If you see the Trading Accountability channel, my monthly recap talks about how I am not thinking about any of my profits like house money, like, oh, it's not mine anyway. I took it from 800 to 2,000. Now it's back at 16. I'm still up $800, but I'm down 400 from what my revenue high was. So obviously I gave back 50% of what my profits were already, and they're my profits. It's my money. Once it's in my account, it's my money. So why would I give it back? Why couldn't I go back to just trading the one and continue to improve my trading skill? And then maybe once I get back to 2,000 and hold it again for a week, then I'll go to 2 and remind myself, last time you did this, you took it to 16. So, and this is a lot of self-talk. This is a lot of, maybe you have to do it in journaling. Maybe you say it out loud. I'm an audio learner. So if I say things out loud, I am so much better off. And handwriting them is good, but saying them out loud for me internalizes it. And so that's why I like audiobooks so well, is I can listen to them kind of in the background or when I'm driving or running errands, whatever. And it's, if you're struggling with psychology, you need to go into the Psychology Risk Management channel. You need to go check out the audiobook of the, oops, hold on just a sec. My suggestion would be that you dig into our channels. I'm going to say that dig into our channels and see what's available as far as content goes. There is a lot of information, including some like YouTube that has trading affirmations. Trading in the zone is probably the single most important thing that I ever was exposed to. And it's what turned my entire mindset around, which is why I focus so much on the mindset coaching piece. But make sure that you're utilizing the resources in the server, because there's a lot of content here, including just going back. I think, what do I have? Like, I have 2.5 years. I have at least 80 Mind Over Matter sessions recorded over the last almost 3 years. I've got a lot of the Mind Over Matter that is just reinforcing all of these concepts, and some audiobooks on YouTube, some printed books if you like to read them. It all depends, but you have to reach out and take that. So I have, how many trades should we limit per day in the smaller account? So there's 2 different ways to look at this. If you say to yourself, I'm only allowed to take 2 trades today, period, it could create a little more delayed, delayed gratification kind of feeling, where you don't feel like you have to jump in a trade because you don't want to have that one of 2 trades wasted. Or you could even say 1 trade in the day, and if it fails, I don't get another trade. Or you could say 2 trades, but if the first one fails, I don't get another one. Or you could say I have 2 trades just in case the first one fails. You have to think about how your psychology works. Oh, there's my time. For me, what I look at as overtrading, if I'm not seeing the market well, especially like the rule with 3 losses in a row, I'm done. I'm done. And if I had a day, like if yesterday were 3 losses in a row and I had 1 loss in the morning this morning, then I would have put myself on a timeout that I normally do after 2. And at a second loss on the second day in a row, I'm probably done trading for the day. I might give myself 1 more. If I take 3 losses 2 days in a row, which I can't remember the last time I did that, I'm probably done for the week. I'm probably just going to be like, there is something wrong. Either you're not sleeping well, or you're stressed out about something, or something's wrong with how you're seeing it. So I don't like to limit the number of trades. I like to limit the number of losses. So I will keep trading. I will continue to press that. If you are finding that you need to have that restriction of there's going to be a couple good trades out of each trading day and you need to wait for them, then you would set that type of parameter up for yourself. But that is very individual, and that's where you dig into your own psyche and really think, what motivates me? What scares me? What scares me is not being allowed to trade. So if I can't trade because I broke my rules, that is way worse than just taking a loss and being like, well, on to the next. Here we go. Which is why I think, I don't know, like the stress of the loss is so much diminished by the fact that I'm okay with it because I get to trade again. Changes how you think about it. So my pain is tied to not being able to trade. My pain is tied to, are you seeing the market well or not seeing the market well? And you can take losses that are well executed trades because you managed your downside risk, and you can take winners that are poorly executed trades because you didn't follow your rules, you oversized, whatever that is. And so it's really, really important that you kind of dig into that. And the only way you're going to be able to do that is with journaling. So if you haven't listened to Trading in the Zone, start there and then work backwards through all of the content here. All right, guys, I do have to hop off. I'm going to save this recording and post it, and I will see you again shortly in voice.